Good afternoon, everybody. Welcome to this week, and what a week it has been. Oh boy, it was only a 4-day week, but I'll tell you, it sure felt longer than that. It felt longer than that. As we came into this week, as you guys know, last week we ended with a nice big red dump on Friday. And coming into this week, the big question I think on everybody's mind is what the heck was going to happen on Tuesday? Were we going to see a continuation of that dump? And what I had said last weekend is I thought as long as the U.S. market showed recovery on Monday, we would probably recover pretty quickly on Tuesday. And that's exactly what happened. So overall, forget about last week. This was a strong week. We did have a pretty darn good week. A lot of green, a lot of green. Oh boy. I liked it. I liked it. It was nice. I'm glad I did get in on that big dip on the previous Friday. I'm glad I got in and got a few stocks, but I'll tell you, it was a strong week. Yeah, very interesting week. And we, of course, got lots of news. We got a great show in store for you today. So let's jump right into our first story because I like to get one out of the way before we get too far along. So Canada's labor market, oh boy, just hit a speed bump, and it's a pretty big one. And we're talking about the jobs report. So that jobs report, it dropped on Friday. A good way to take a really good week and throw some sour, add a little sour to the milk. So as I said, yeah, the jobs report, it did drop on Friday, and Canada shed 40,800 jobs in June, which was, well, that was much worse than expected. Analysts actually, well, mistakenly thought we were going to add about 13,500. They were off by quite a bit. Well, they were off by more than 50,000 jobs. So full-time jobs, that's where the pain is. Full-time jobs were hit the hardest. We lost 51,000 full-time jobs. Now, we did buffer that out a bit by adding 10,300 part-time jobs. Oh boy. What can I say? Unemployment. Now, this to me is amazing. Unemployment still managed to hold on to 6.9%. Despite, even the analysts thought unemployment was going to edge up to 7%, but it did hold on 6.9% for June. For July. For July, duh. I think we're going to see things. I think it's going to edge up to 7. When we get the August numbers, I'm expecting 7. Now, one group of people got hit really hard, and that's the youth, the younger people. So aged 15 to 24, they experienced the bulk of the losses as youth unemployment rose to 14.6%. And that's, the last time it was that high, we had a pandemic happening. So just to give you a general idea, sector-wise, information, leisure, and culture, those are the areas that were hit the hardest with a loss of 29,000 jobs. Now this next part's a little surprising, but construction lost 22,000 jobs. Yikes. I do not like to see that. I don't like to see that at all. We need construction going up, not down. So let's hope we can get a turnaround on construction in August. Now, not all sectors fell. There's always somebody who did it better than average. In this case here, transportation and warehousing, they added 26,000 jobs in July. That's for them, that's a big 2.6% increase. Obviously, with the warehousing, and we've talked about this before, a lot of companies that order Chinese stuff have been basically been dumping a lot of it into warehouses to sort of wait to see what happens with the tariffs, to see if they can get a better deal moving some of the stuff across the border. So that's probably helping that warehousing. Now, of course, I mentioned the border, so yeah, we have Trump to thank a lot for this. This and, well, the steel, aluminum, and auto tariffs, they hit manufacturing hard and dampened a lot of the normal hiring plans that we'd be seeing in that sector this time of year. Outside of that, now outside of those sectors, this is great. We actually have not seen a full collapse. As for the most part, other sectors, I was going to say specters, other specters like boo, but other sectors have remained stable. So that's actually not too bad. The actual layoff rate, so the layoff rate came in at 1.1%. And that, believe it or not, that's actually comparable to last year. So we're not seeing huge layoffs. And that's good. Well, there's probably higher layoffs in those sectors I was talking about with like the auto and steel and aluminum, but they're being offset. So overall, we still have a 1.1% layoff rate. Wage-wise, the hourly wage for permanent employees, it actually rose 3.5%. So that's now the average is up to 37.66. That was actually up 3.2% from June. So the Bank of Canada does not like that. They always talk a little bit about stagflation and wage price spiral. So that won't make them very happy. So we'll have to see. This jobs report, though, it kind of leans towards a rate cut. It kind of does, because we are seeing some of that damage in our economies. We're seeing it up front. All right. Oh, I forgot to put the graphic up. There we go. There's our workers. Oh dear. Yep. There we go. We started the show off right. Okay, let's actually hit the chat. I want to say hello to you guys. We got Jonathan in first. Am I late for a jobs cut? Well, hopefully you're not involved in a jobs cut, Jonathan. Hopefully not. Jersky says hello. I thought I'd roll in early for once. Well, good to see you, Jersky. Always nice to roll in early. Get the first comment in. Usually you got to get it pretty early though to beat Jonathan. That's for sure. Max says good afternoon, everyone. And speaking of Jonathan, gold. Yeah. We do have a story. We have a gold story coming up. Actually, I think it's story number 2, to be honest. Cowboy says, greetings all. And if you guys haven't figured this out, usually story number 2, it's normally the top story. It's normally the story that I'll feature more than anything else. And the reason for that, why don't I do it number 1? Well, because it gives people time to roll in. And we have one usually the first story. It's usually going to revolve around a report. So it might be a inflation report, or it might be, so CPI, or maybe in this case the jobs report, or the Bank of Canada. Oh boy. All right. Bismarcky says, good afternoon to all. Hope you all enjoyed the weekend. I hope so. Now, we are under a heat warning again out here in the east. I think today the humididex is about 40. But since ChatGPT fixed the air conditioning, it's a little bit better. I'm not up here. I'm not like in sweat soup territory. So, gotta like it. Also, ChatGPT 5 has been released, and kind of mixed. A few people aren't liking it. I like it. I personally do like it. I think it's fine. It's a good improvement. But in some cases, and this is kind of, and I guess I kind of understand this. There's some people who are like, well, it's a little different from 4, and I really liked 4. So yeah, it is a little different. And we can certainly talk a little bit more about that later if you guys want to. Jersky is saying, nice green week for me. Go Easy is on fire. Yeah. And it's kind of a double-edged sword. It's great if you're invested in Go Easy and they're exploding. But when you think about who their clientele is, usually it can also be an indication that, people are at that point that they're making, that they're borrowing a lot. And that can sometimes be a a bad sign for the economy. It can be a bad sign. But nonetheless, in this case here, Jersky's invested. So grats on that. Friday dividends were sure nice. Yeah, I believe. Yeah, I think the C day and the Q day, I think they get, and the S day, I think they dropped. I think their first dividends have dropped. And normally with a lot of these new dividend funds, normally you almost got to go a month before you see your first one. So it's nice to see those starting to drop. That's for sure. We got Rory in the house with a hey all, and Ruku Stittsville, happy heat wave all. Yes, yes. It's going to be, as I said, there's a heat warning in effect. So 40 degrees today, 40 degrees tomorrow, and maybe a bit of it Tuesday. But I think after Tuesday it breaks. And then things will get back to normal. King of Day is in the house with an all. Hello, happy Sunday. Good to see you, King of Day. Hope you're having a fantastic weekend. Get rich shorts. What's your expectations for strategy and Bitcoin, and also generally the cryptos like XRP and Ethereum for like a year to few years down the road? Okay, it's like, yeah, just plot out the next couple of years for me, please. So overall, I'm bullish on Bitcoin. I still think we're going to have one more all-time high before there's even any danger of us retracting. We will have a crypto winter, but it's not going to be as bad as any crypto winters in the past. It's going to be a mild winter. When is that going to come? It's hard to say. Sometimes it's really hard to predict crypto. Crypto can change very fast. But with a lot of the institutional investors who are now on board, thanks, of course, to the spot Bitcoin ETFs in the U.S., and also with the current government being crypto friendly, I think if we see a crypto winter, I'm beginning to think we're not going to see it until maybe early 2026. So what does that mean for you? Well, that means right now that I'm still thinking we're going to see somewhere between. I've been kind of adamant on the 130K, but I think there is a possibility it could even make it up to 150. But at that point, we'll probably get a retraction. How far? It's going to be hard to say. The bottom in crypto winter. So when that happens, I think the bottom will be higher than the old all-time high. So the old all-time high was like 60,000, 60-something thousand. So I would say 70,000 would be. I can't see it really going below 70,000 if that happens. Now, if that does happen, if you're not into crypto, or if you're on the sidelines, that's the time to buy. That's the time to buy. Just start stacking sats. And on the other side of that, well, we know what happens. Brand new all-time highs again. That's when we're going to, probably the next run after that crypto winter, that's probably going to be the run when we get to 200K. So, if you can if you can more than double your money by stacking, to me, that's not a bad deal. Now, there are people out there. There's people in this community who will be like, I'm not touching it. Crypto is a scam. I'm not going to touch it. And you know what? That's fine. You don't have to. There's plenty of ways to make money. I do have faith in crypto. Not all crypto. As you guys know, I make fun of at least one crap coin every single market close. So, so that's kind of where I'm thinking. Now, strategy, as long as Bitcoin is strong, I think strategy will still have some pretty good performance because they've got so much Bitcoin on their balance sheet. It's hard for them not to do well when Bitcoin does well. But it's not really a direct correlation just because of a lot of the things that they're doing where they're borrowing money and they're it's an interesting story. Now, other cryptos like XRP, I think XRP is probably gonna have a very good year. Ethereum as well, also Solana. So yeah, I would say that I'm thinking like even if you do get in, or you increase your holdings in any one of them, and then we do go unexpectedly into a crypto winter, the big thing is to not panic sell as things are falling, and just lock it in and just, you know what, like if you have it on an exchange, I would move it to like a hardware wallet and just sort of say, okay, you're going to be spending the next year in that hardware wallet while we allow the crypto market to go through winter and begin recovery. So, that's just kind of how I would look at it. All right. Now we have Woodemic. A Woodemic. What's a Woodemic? I'm not sure what a Woodemic is. Oh, I will mention I did turn. No, I didn't. I didn't turn it back on yet. I have to remember to do that tomorrow. Basically, because we were having some sound issues the other day, so I turned off the what is it? The echo cancellation. I turned that off, and that seemed to fix it. Now it is still off, but I go through. I actually use StreamYard when I'm actually filming. When I'm filming a video, so I filmed it with it off, and when I got my final result, and this was the Loblaws one. So if the Loblaws one sounded, a little off, that's why, because of that I had that turned off. So, and it did actually, it brought, how to describe it? It brought it in at a lower volume. So to get it to the volume, because there's a certain decibel area I need to hit for YouTube, to get the best sound. So I had to pump it up, and in the process of pumping it up, all of a sudden, every little sound, like if I hit a keyboard, if I hit my keyboard, bang, that sound on the video, every breath. And the worst part is I have this thing called noise gate. So what noise gate is it is it's a little program in Final Cut Pro, and I use it to filter out certain sounds. And those are basically, I use the frequency of my typical breathing. So it will typically, it doesn't get them all, but it gets I would say it gets about 50%. So it cuts about half of the breaths out, and then I manually get rid of the rest. I don't know why I do it, but I don't know. I guess it seems to sound kind of unprofessional if I'm breathing on a video. I'm not sure why. It's like you have to do it to live. But so yeah, I had to manually do that. So my editing on that video, just the regular, just getting rid of breaths and pulling everything together, it pretty much doubled the amount of time. So yeah, I was impressed. I still got it out in the afternoon for the channel members. So all right, that was a tangent. Cowboy says so you have to be building stuff to have jobs. Maybe if we were building houses, not importing sea cans. Yeah. People need to get back to work. And we actually do have an interesting infrastructure story coming up as well in one of our news stories. So, yeah, what can I say? Kiev and Kaz is in the house. Yay, made a live stream afternoon gang. Let's see. Atlantic Canada went full idiot on the hiking bans. I haven't heard all of the bans. I know that there were a bunch of fire bans, but I'm going to assume that they're just saying no hiking at all. And it's probably because they're worried that some people might be hiking, and maybe if they're a smoker or something, they might throw a butt or something and start a fire. After the fires that they had around around the Halifax area, what was that, last year? I have a feeling that they're probably gonna err on the side of caution more than anything else. But I haven't actually read the full thing on these hiking bans. So, Cowboy says Amazon jobs, Walmart jobs, all minimum wage. Yeah, and soon enough, And, well, not even soon enough. It's already happening for Amazon. I mean, the robots they don't take salaries. Well, technically, yes, they kind of do. They don't get paid per se, but you have to pay all the maintenance, the energy, probably everything that they need. I don't know if if you have to lubricate them or something. um, so yeah, we'll just put that all into maintenance. Let's see, no cuts to Liberal MPs. They are still making big wages. Yeah, I mean MPs make a lot of money. Absolutely. And here's the funny thing, though. And we can't. Honestly, we can't really blame. I'm not going to blame the Liberals on this. I mean, when the Conservatives were in power, they didn't. They really weren't cutting. Nobody cuts. Like the problem is to actually cut all of the salaries. You'd never get it through. Even the Senate. I mean, it would be very hard to get a good pay cut in there. Not to say it wouldn't be nice, but and here's the thing. Well, let me just say this. I would be happy with, you know what? I'd give you guys all a 10% raise if you can cut all that other crap spending. If they spent things smart, they could, there'd be no problem. They could make a little more if they were doing their job. Because we would be in really good shape if they were doing their job correctly. you gotta admit that. So I would be, but right now, no. I mean, if you don't do your job, you shouldn't be making the big bucks. Rory says, I'm putting together long-term puts on some holdings. Interesting. I can't wait to hear about them. Jay says, I bet those job numbers don't count those hours got reduced or given up looking for a job. That is correct. That's one of the reasons that the unemployment rate is still at 6.9%, because once you're no longer on unemployment, once you're pretty much, you've given up, you don't get count. And that does not, if your full-time job got cut down to a part-time job, that you're still counted as working. So yeah, absolutely, Jay, 100% on the spot. That's exactly true. Doorpat says, hello everyone, how's the heat? It's hot. It's very hot. Rory says it's 19 degrees Celsius here. Jeez, Rory. We're all moving to Rory's place. Rory, you got some extra rooms there? Max says, looking forward to the fall now. Too hot to keep working outside. Yes. Well, the fall's not that far away. It's not that far away. So, on the nice side, I'm still really enjoying this iced coffee. So, Rory says, I like to buy 100 bars of gold press latinum. Nice. Of course, that instantly made me think of Quark on Deep Space Nine. I don't know why. I think I even heard Quark's voice in my head say, I'd like to buy 100 bars of gold press latinum. All right, let's see here. Cowboy says, hearing CBDC is being pushed through soon. That's a very scary thought. Yeah, some of these digital currencies. It'll be interesting to see how that all is going to work out. But yeah, I can understand that. All right. A says, hi, Candace. It's a good time to buy rate-sensitive stocks. So REITs, healthcare, utilities, telecom. Oh, no, is it? All right. So right now, yeah, utilities are really strong. Like utilities have been having a good year. REITs should be doing better than they're doing. Now, they are starting to pick up. But I would say, now healthcare, I guess healthcare is that other one. Healthcare, I'm kind of on the fence with healthcare. Like right now, healthcare in the U.S. not doing super great. Yeah. I guess we can blame RFK Jr. We can blame the big beautiful bill. There's pain. I think there's more pain ahead for healthcare in the U.S. Canada, I think it's gonna. I don't think there's any advantage right now to buying it, unless unless, and there's an exception to that, if you're looking at senior care, healthcare. So, for example, long-term care homes, things like SIA, EXE. I think they're all good buys. And EXE right now is down, so that's extended care. They are down. I think they're at a good point. I did add them during last Friday. I did add a few to the challenge on that one as well. But yeah, utilities absolutely. I think utilities are going to be strong for a while. Yeah, utilities. I would say REITs should be. I think REITs will start to recover. I don't think we're going to see as much strength as what we're going to see in utilities, but I think we should see some movement up. Now, telecoms are interesting. Now, if they continue this trend of selling off assets, like we were talking about TELUS selling off 49.9% of their towers, that could be a good thing. If they start reducing their debt, you could see a little bit of a recovery in that telecom sector. But I would still, I still think you need to be a little cautious with telecoms for now. But we'll see. We'll reevaluate as we get a little bit further. Pierre says, "Hi Candace. MDA has been a bit shaky Thursday and Friday. It closed on Friday 5% down. Do you think it is a good time to buy?" So MDA, I have a strong outlook for MDA on the long term. So yeah, if they're down, I do think, but I think MDA is going to be one of these ones that you're going to need to have some patience with them. Like I think they're going to overall move up over the next couple of years, but it really, after that, that's and within about 2 years, I think that's when we're really going to start to see MDA start to pick up. Now, they have recently gotten a contract that has been very good for them. So, yeah, I would say if they're down, it's probably not a bad time. Like I'm pretty bullish on them long term. We'll go with that. Bullish on the long term. A says Sun Life down like 5 to 10% recently. Yeah, I didn't look into that. I did not look into that one yet. But yeah, good old Sun Life. When it comes to insurance companies, I'm a huge fan of Manulife Financial, but one of the reasons for that is Manulife Financial is the one insurance company that has, they've got some good dealings in China, and I think that's huge. I think that's huge for them. All right. Rory says 150,000 maximum fine for walking in the woods in Newfoundland is what I heard. Holy banana bread. That's crazy. That's crazy. Yeah, that is absolutely crazy. Yeah, that's very crazy. I'm trying to think if I could think of any way to just that. No, I mean, you know what? If you're worried about fires and you don't want people in the woods, I think that's overkill. I would be more inclined to say, I even think a $20,000 fine would be overkill. Find somebody $1,000 if they go in the woods. Even then, hopefully they define, like, are they just talking about all? It can't be all woods. They have to be talking about, in this case here, provincial land, or I don't know. Like I said, Rory, I haven't really looked into that one, but that's steep. Yep, Quark. Let's see. Canada. Or I think you mean Candace, maybe. Or maybe you're asking Canada. Canada, what are your thoughts on buying the dips on IBM, International Business Machines? I do like tech in general. IBM, I mean, they're solid. They're blue chip. So, yeah, I would have no problems with that. Like, I think that they're going to, do well as we move forward. I would say IBM it's not that bad. Yeah, and you're saying here that the cloud revenue dropped, but fundamentals haven't changed much. And I still believe they are huge in the quantum race. Buying Amazon too. Yeah. Well, you see, that's the thing with IBM. IBM, I mean, they do have AI plays. They're just not front and center in this in the AI race. But when it comes to quantum, they're definitely in there, and I think they'll be more front and center in the quantum, because quantum will be what comes after AI. Now, not to say that AI is going to go away. AI is still going to be there, but quantum will be the next big the big push, but I still think quantum, even though yes, we saw the Willow chip with I think that was a Google chip. I think we're still at least a year, I think, from quantum getting closer to center stage. But that doesn't mean that you shouldn't get involved or you shouldn't start stacking. So, for example, I've mentioned how I'm pretty bullish on BlackBerry. BlackBerry is they're working on software. It's quantum. It's basically quantum encryption, and I think it's going to be huge. I think it's going to be huge. So BlackBerry is one of those ones that right now they're pretty darn cheap, but they're probably going to be that stock that, well, a little while from now. When I say a little while, we're probably a couple of years down the road, we'll be wishing that we had bought some BlackBerry when it was this cheap. All right. If Bill Gates is still investing in CN Rail, the dip cannot be all that bad. Yeah. I mean, yeah, and I love, like, I do love CN Rail. All right. And yeah, sorry, I was distracted for a second. No, I love CN. CN is they're the backbone of our supply chain. Them and CP. But the big thing with CN is as we start to develop oh boy. What a day. Here we go. As we start to develop our critical minerals, CN is, well, they're the one that have the tracks up north where the critical minerals are. And that's going to be huge. That will be huge for them. So yeah, if CN keeps going down, I will add more because I do have a lot of faith in CN. And I do like CP too. And as I've said before, I mean, CP will probably beat CN in the short to midterm. But when it comes to long term, my money's on CN for sure. A Cowboy sold FN and bought ENB. Oh, I love Enbridge. Fine start at 25,000 in Nova Scotia. All right, well, it's better than 150, but still. Yeah, these are just absolutely crazy. Damn autocorrect. I meant Candace, so sorry. No worries. It happens. It happened to me once. Many years ago, I was very distracted. I had to sign my name on some document or something. And I looked down and I accidentally signed Canada. So it happened to me once. I guess I can forgive you for sure. Rory says the Liberal government should have invested in forest management 10 years ago. Yeah, there's a lot of things that should have been done 10 years ago. Like this infrastructure push, this should have been done 10 years ago. You know, the government should have had the foresight to realize that all of our eggs were in the U.S. basket. And if anything ever did happen to that basket, as unlikely as it was, we should have diversified long before now. So yeah, 10 years ago, I would even go as far as to say 20 years ago. You know, I don't want to single out the Liberals. I'm saying, you know what? There's been multiple Liberal governments and multiple Conservative governments, and nobody's done anything. So now it's the time to get stuff done. So that's what I'm hoping to see. I'm still optimistic. All right. Cowboy says, given the unemployed, jobs pulling the tinder and deadfall out of the forests. Oh boy. Rory, I think CN and CP will reach parity in price soon. That's, well, That's yeah. I mean, it could happen, but I don't know if it. I don't know if soon. I don't know if soon. Maybe a year to two. We'll have to see. We'll have to see. Um, yeah. Right now, I don't feel like that's gonna happen. At least not right away. All right. Let's see. The Newfoundland fines can range anywhere from 50,000 to 150,000. It might seem crazy, but unfortunately, some of the fires have been deliberately set. Yeah, yeah. That's to me. That is well, yeah. It's crazy. I mean, I can understand. You know what? Somebody might accidentally set a forest, start a forest fire. Usually, it's because of stupidity. But when somebody goes out and intentionally tries to set a forest fire, I just hope they catch them. That's all I can say. I hope they catch them, and I hope they get prosecuted to the full extent of the law. Because yeah, don't do that, kids. Never do that, please. Kelly. AX.UN or UMAX. I'm going to drop my pitty little $25 for this week into either one or the others. Ties into that REIT or utilities. Well, we were just talking about utilities. And I think utilities right now, they are showing more resilience than REITs for now. So I don't know. I would kind of lean a little bit towards the utilities. I think, and UMAX is perfect. UMAX is great. You're getting some income back from that as well, and it's Hamilton. So what can I say? So yeah, I would probably lean towards utilities. Like obviously do your own due diligence. Maybe AX is reaching out to you. Maybe the REITs are pulling. Now I do love REITs because of course actually one of my favorite Hamilton ETFs is RMAX. So RMAX is well, you know what? When's the last time I pulled up RMAX? It's been months. RMAX. So here we go. Hamilton REITs Yield Maximizer. I'm gonna pull. Let's go here, the three. So yeah, this has been one that when it first released, it pretty much released at the beginning of the rate cuts. Rate cuts are big on utilities, and you could see. And then, of course, we had, there was definitely problems after that. The price came back down. There's Trump's Liberation Day. But yeah, we're starting to make our way back up. And right now, I mean, we are, it launched at 16, and we're at 1677. So we are doing fine. And you are getting a half decent dividend on this. It's not a huge dividend, but it's big. It's 9.9%. So I do like this. Now, what I like about this this ETF is that it's giving you exposure to both Canada and the U.S. So 50% of this is Canadian REITs. It holds 50% Canadian REITs, 50% U.S. REITs. So you're getting a very good exposure across the two of them. But yeah, so this here, to me, this is a great one. So if you want exposure to REITs, I think this is a good one because you're going to get that income as you're moving along. So, and I still like it. And even when it did this, I did not sell. It's still in the 0 to 100K challenge. Rory says $127 for CN and $103 for CP. It's getting close. It is. Parity, though, keep in mind, CN is down quite a bit. So when CN does recover, that's going to make it that parity a little bit harder. Because I'd have to do the math, but I'm pretty sure CN is down a lot more than what CP is currently. Cowboy says thinking of selling FTN to get Q Day. Q Day. Yeah, I do like Q Day for sure. Jay, speaking about utilities, our water and sewer went up $40 extra to pay water plant upgrades and garbage collection here in Winnipeg. Oh my God. Yeah, it happens, right? Oh, that's so good. John says to Kelly, UMAX has been down from the start and cutting their distribution. I sold mine. They're better. There's a better option out there. Okay. Yeah, another option as well is Utes. So the Evolve one, UTES. So they are in the green this year. So let me pull them up here. Let's grab Utes. All right, so this here is the Evolve one. And there we go. And let's pull up the last year. So you can see this is the kind of, you're going to see this on pretty much all utilities because this is during that part when we were still coming out of the aggressive rate hikes, all of that fun stuff. So, you know, we're still moving down, but it has been kind of leveling off. So this is kind of income. Now, the other thing too, just to sort of keep in mind, is this is if you want income. If you're looking for growth, you know, this is, I hold this here in the 0 to 100K challenge. Now this here does not have covered calls, does not have leverage. In fact, your dividends are about 4% on the dividend. So you're not going to get a ton. You're not going to get a ton. But you can see, and this is looking at the last year, this has been pretty much a steady ride up. And that's kind of what utilities is doing. So a lot of times when you look at what utilities is doing, and then you look at something like whether it be Utes or UMAX, you're never going to see that same slope. And that's, once again, and we talk about this a lot, those covered call funds like that, they're designed not to bring you a giant total return. That's not what they're designed for. They're designed to provide you with income. And to do that, covered calls, for example, covered calls, they, you know, you basically trade a lot of your upside potential for that income. So instead of seeing it go up, a lot of times they move sideways, but you're getting paid. You're getting that income coming out. So it depends on your strategy. So if your strategy is to grow your account as big as possible, you're better off with something like XUT than even UTES, than Utes. You're actually better off. But if the income is your goal, so especially if you're in retirement and you're like, I'm building income, I'm building tax-free income to supplement my my OAS, my GIS, all of that stuff, then yeah, that's what they're for. Coming up, by the way, guys, on Thursday at 3 p.m. Eastern, Adriano from Passive Income Investing, we're going to have a conversation. This week, conversations. Our first one was Brandon Beavis. This time it's Adriano. It's going to be a great show. It's going to be a great show. So those of you who love the income, this is going to be the one to drop in. And be sure to get in. I'm going to try this time around. I'm going to try to get to more of your questions, because I think with Brandon, I didn't get to as many as I wanted to. So I'm going to try to get to more of them. And of course, there's always supers when you're there. If you absolutely want your question read, absolutely feel free to do that. And you don't have to go all out. Like I think the cheapest one is either 99 cents or $1. You know, just use that if you want to get your question read. Jersky says, I have UMAX and Utes. Oh, I'm going to go back to big screen here. I like Utes better, but I'm not a professional. Yeah, I would think between the two of them, I think I would prefer Utes. Jersky says, I've been thinking about EMAX to go with my ENCL. Yeah, EMAX. So that's the energy one. Yeah, EMAX is pretty cool. It is pretty cool. Ofer likes Utes as well. What's your thought on HDIV versus CDAY? They both seem to be the same. Are you making a shift from HDIV to CDAY? All right. Yeah, I mean, CDAY is the new one, shiny and new. You're looking at also enhanced, I'm going to say enhanced dividend frequency. So the dividends, CDAY is paying out their dividends twice a month. Now, here's the thing. HDIV, I would say HDIV is a little less risky. And I'll say why. The reason why is that C-Day is 0 day expiry, time, expire time. So basically what that means is that C-Day is writing options, same day options, so 0 day to expiry. I don't know why I want to call it timed. I always want to go timed expiry, but to expiry. So C-Day is writing pretty much what it amounts down to is it's kind of, well, it is day trading. That's kind of what C-Day is doing. HDIV, they're writing options as well, but they're not writing 0 day. They're longer options, like, week options or a month options, or maybe longer, depending on what they're writing. So there is a little bit extra risk with C-Day, but as a result, you get your rewards a little bit faster. And if you're reinvesting them, then that will give them a little bit of an edge over HDIV, but it should give them an edge. We need some time. We need time because I would love, after about a year of C-Day, I'd love to just plot C-Day against HDIV and see who really is the winner. So yeah, that would be fun. That would be fun. Clive is in the house. Clive R, the driver. Clive, I believe you drive. But hi, yay, from Southern Ontario. Welcome to the show, Clive. Hopefully you're not driving right now. You're just sitting back and relaxing. Rory says, oops, Mary isn't here. Got to hit the like button. Oh, that's right. I forgot about the like button. If any of you guys forgot about the like button too, hit it while I'm having some iced coffee. Thank you. All right. Over 0 days to expiration funds can absolutely keep up with the underlying. Yeah, I mean, if they're managed well, they can do well. They can do very well. So, once again, I like the management team at Hamilton. So my hypothesis is that they're probably going to do very well. And, like I've got in the challenge, I do have Q Day. Because, let's make a technology play. Why not? Ofer, you can compare T-SPY to SPY. Yeah, true. I could definitely do that. Is it gambling? Is it not? Yes and no. And that's a horrible, probably a horrible answer. What do you mean yes or no? That's a cop-out. What I mean by that is that day trading is more difficult, but the object with day trading, it's not to be right all of the time. But what you want to do, and a lot of it is technical analysis and knowing what's going on with the market and really knowing your stuff. You want to basically win a little more than you lose. So, for example, if you're making a whole bunch of these 0 day to expiry options, you want to be right 51% of the time, bare minimum, 51% of the time. It's unreasonable to think you'll be right more than 60%. So a lot of them are going to be stinkers, a lot of them. It's just the way things work. Things move unexpectedly. And when you have a smaller time frame, you don't have the time to wait things out. So, you have to just go in, throw it in, does it work? Yes, great. Grab the profits. Is it not working? All right, grab your loss. Because if you don't do it that way, you can get into a situation where if you hold on to a loss hoping for it to recover, it can turn into a bigger loss. So that's kind of the whole thing. So with day trading, you're looking at you have an exit strategy on every trade. So it might be, you'll get your stop loss, maybe it's 5 ticks lower than where you went in. And then maybe your profits is 5 ticks above where you went in, or maybe it's 10, depending on the asset. So, you're getting in and you're getting out pretty quickly. Now, in this case here, it's options. So they're actually selling the option as well. So they still have the premiums coming in. They still get to keep those. But it is a little bit more risky. So is it gambling? When I say yes and no, it's not pure gambling if you know what you're doing. If you know what you're doing, it's still like gambling, but it's like you're the dealer. So we'll put it that way. So if you're playing blackjack and you're the dealer, if it's a tie, you win. So that tie, consider that being that you know what you're doing. So because that's all you're doing with day trading and that type of behavior. You just need to win a little bit more than you lose, and then you're profitable. All right, Harvest new HHIC. HHIC. I don't know if that was is that a new one? I've not heard of HHIC. I know of HHIS, but maybe that's a typo. Let me know. Michael says, hello, Candace. Can I please get your thoughts on AMZH for monthly income and a play on Amazon? All right, now let's pull it up. Let's pull up good old AMZH. Here we go. Now, of course, I have to come all the way down here. All right, so these are, once again, these high, so the Harvest High Income shares. I like them. I do like them. So Michael, I actually think you're going to like the next video because I'll plug the video first and then I'll answer this question. So one of the things in our last high income video is I excluded all of the new funds. So none of them made it to the list. So this time around, I'm backtracking and I'm only looking at new funds. So obviously, Harvest is dominating this list. So to be honest, they've owned this list a lot more than I thought. I thought there was a few in there that perhaps would share a bit of the spotlight, but no, Harvest really come in. But it's all about the single income. So obviously we talk a lot about HHIS. So HHIS, well, that is their ETF that holds all of their other ETFs from the high income shares. Amazon, this is one as well. I like it. If you're big and bullish on Amazon, this is not a bad one. They have them for a lot. There's Amazon. You can get Amazon. You get Nvidia, Palantir, Netflix, Microsoft, Strategy. There's just a whole bunch of them. So far, yeah, they've all been doing pretty darn good. And if Amazon, if you're bullish on Amazon, then that's not a bad one to go for monthly income. Now, some of them are doing a lot more than monthly income. Some of them are doing really well, but what can I say? Clive says hot as all heck there at 32. Yeah, same here. Ottawa is hot. It's a humididex or a heat index of 40. What do you think of BEP? Oh, Brookfield. Yeah. Oh, I actually brought up AMZH without showing you the page. Whoops, my bad. In this case here, let's pull up the Brookfield here. All right. So BEP is your Brookfield Renewables. So Brookfield Renewables, let me just see here. Let's see, Class A. We'll grab this here, right here, .un. All right, so yeah, anytime you guys see .un, by the way, guys, that means unit. just in case, because I've heard people say, oh, .un, is it a REIT? I'm like, no, that just means unit in this case here. Yeah, so Brookfield Renewables, I want to pull up the 3 years. So this is one of these Brookfield ones that there's a lot of volatility here, but they have, for the most part, been moving down. Like, look at this. High, lower high, lower high, lower high. Well, just by, those two are kind of equal. This is a slightly lower high. So they have had a downward trend over the last while. I'll go back 5 years and you can see it's been going on for a long time. And so one of the problems is, I think, as much as we put a stress on renewables and how renewables are important, there's a lot of factors going on, especially south of the border. Where they're in a situation where they've removed climate. Anything that references climate has been removed from government websites. I think that's going to slow down some of the recovery of this company of Brookfield Renewables. So, is it a good long term? Hard to say. I don't know if they'll go that much lower, but they could. They could continue on this track, but long term, I think they'll be fine. I think on the very end. So, if you have a long runway on this one and you want a dollar cost average, this is a great place to start. Yeah, absolutely, because I think you're going to have probably a good year to continue dollar cost averaging at some low prices before we see any signs of a recovery on this one. But that's BEP, good old BEP. Cowboy picked up C Day and Q Day. We'll ride it for a bit. Not too bad. Lisa is in the house with a hi, everyone. Clive says, "What's your thoughts on stock lending in Wealthsimple?" Honestly, you don't make much. It's probably not worth it. I mean, if you turn it on if you want to, but honestly, you're just gonna make pennies. You're really not going to make a lot of money. I don't see it as being anything that is worth even considering, but it's up to you. I mean, it's not going to hurt you if you do it, but it really isn't going to. It's not going to provide you with a whole bunch of. It's not going to be another income stream by any means at all. I'm not sure if it's released yet. Was on passive. Oh, so HHIC. Well, okay. That's a good piece of information, because I was waiting on you, because I was like, is that a misspelling? Were you asking me about HHIS? Oh, okay, let's take a look here. All right, I'll just pull up Google HHIC, and you said harvest. Let's see here. Okay, Harvest Canadian. Oh, here we go. Ooh, all right, Clive, you've got me to, ooh, this is cool. All right. I don't know what they're holding. Let's see if the product sheet gives us any information. All right, let's see, covered call, employees modest leverage. So yeah, it's kind of got the same thing. Management fee right now is looking to be about 0.4. They'll write on about 50% of the fund. Inception date, last distribution, monthly. Yeah, interesting. I don't know here what it's going to hold. Let's see. Yeah, it's not telling me exactly what it's holding yet, but I'm liking it. I like it. Yeah, this one got under my radar. I had not seen this yet, so yeah, the Canadian version. The only problem is they don't have any high-income Canadian companies. None. So that's interesting. So are they just going to hold a basket in there, or do we got a few more things coming out that we don't know about? So that is interesting. I want to see more. All right, HHIS have a new non-leverage one, I think. What it is. Yeah, so HHIS, they're only holding the leveraged version of the high-income shares. It would not surprise me to see another version of HHIS that holds just the covered call versions. Maybe, but that would be interesting. But yeah, this HHIC looks interesting. I'm liking it. Yeah, King of Day's not liking it. King of Day is like, HHIC is Canadian, so it's gonna suck. All right, fair enough. Fair enough. HHIS is awesome, consistent. Adriano dropped a video. I have not seen that yet. I have not seen that at all. What would HNIC Hockey Night in Canada? What about them? Yeah. Good old Hockey Night in Canada. Until I'm surprised. I'm surprised that they're even allowed to air anymore. With everything being monetized the way it is. Figma. Figma. I do not know what Figma is. Let's see here. Figma. All right, here we are. Okay, New York stock. Well, not New York, but U.S. stock on the NYSE. All right, I'm going to pull a couple things up first here. I don't have a lot of information here, but this here is one of the things I want to take a look here. So let's see. All right, so they work alongside product managers, researchers, marketers, writers, and other non-designers. They align on vision, visual concepts, translate them into coded products, all in a single connected AI-powered platform. Okay, I like that. I like what they're doing. My biggest concern right off the bat is that, with AI getting really, really good, are you gonna need a third party? Will you need that third party? Because, you could pretty much, the coding, just the coding elegance in ChatGPT 5 is really off the table. It is, or off the chain, I guess is probably the better word. So I would be concerned about that. But they still might have some legs to them. Now, right now, I've got very little data on here. I'm going to have to go to Yahoo. Because sometimes, whoops, here we go. Yeah, Yahoo right here. That's what I'm looking for. Come on, Yahoo, get me back here. All right. Yahoo might give me a bit more information. Sometimes the TSX site does not do everything for the U.S. stocks. All right, here we go. Let's pull this up. I want to pull a couple things down here. Uh-oh. Torin. I just found, there's a lot of information missing. So, but one thing that's not missing is their profit margin. Negative 85.36%. Holy banana bread. That's yeah. So right now they're hemorrhaging money. So they're not profitable. But that doesn't tell me why. And that's the thing. All that does is it gives me a red bell to say, okay, don't jump into this one blindly. You're gonna have to, if you're interested in Figma, you're going to have to do some due diligence, do some digging, find out why. And look at this. So this here, that's just their 1 day. I'm going to pull up their 5-year chart. Oh, well, that's interesting. Let's go to the 1 year. Yeah, they have fallen quite a bit. So I need to know what's going on with this company. From just the little bit I can see from this quick little scratch, I wouldn't touch them with a 10-foot pole. Now, with that being said, I could be absolutely wrong. I could be very wrong on this, but that's why, yeah, if you're interested in them, do a bit more research. But just from the onset, looking at that profit margin, look at how far that this stock has fallen, I'm concerned about it. I'm concerned. I wouldn't touch it personally. All right. Clive says since HHIS plus 19.05 since it started. All right, Bismarcky, Candace, what are your thoughts on a simple portfolio of a third in Evolve Bank, a third in HHIS, and a third in XEQT? Well, I like all three of those. I do like all three of those. So XEQT, that's giving you your global diversification, emerging markets, all of that fun stuff. And then you're basically using bank. Bank, of course, is giving you all of the resilience to the Canadian bank sector, as well as not just the bank sector. You're also getting the life codes as well. So, like Manulife Financial, Sun Life, Great West Life, and Power Corporation of Canada. They have that in there too. I'm a big fan of bank. So yeah, absolutely. And HHIS is giving you your once again, another high income, and it's giving you that tech sector portfolio. It's a simple portfolio. It's three. XEQT, I think, no brainer. Absolutely. You don't even have to worry about it. And HHIS, I think they will do well. The only problem is when we go into a bear market, tech can fall hard, so you have to be prepared for that in here. And because of the leverage, it will fall pretty hard. Bank, I think bank's probably a solid one because I don't see the Canadian the banks falling a lot. I think there's a lot of resilience in there. I think they're going to be fine. But yeah, HHIS, we haven't seen it in a bear market yet. So that might be one that you might want to monitor a bit, and you might want to change that up if we fall in. So we'll have to sort of see. We'll have to see. Have NPI. They have large offshore wind. If the West Wind project goes forward, they should be the choice if the Canada first story is true. Yeah, I think so. And as I said before, I do have... Oh my gosh, we have not yet gotten to story 2. We're an hour in. That's why I get story 1 out of the way nice and quick here. All right, a couple more comments and then we'll do story 2. We'll get story 2 out of the way. Rory, I'm waiting to see if Capital Power gets some data center projects. Well, hopefully. All right. It holds CAD mega caps like Enbridge, TD, BMO, 10 in total. Okay, is this the HHI or the HHIC? That's what I think that's what David is referring to. Okay, I like that. I do like that for sure. So many ETFs coming out. ULTY went from 200 mil to 3 bill in a few months. Kind of nuts. I know, absolutely. Rory says, let's see, I bought CPX at $34 a share. I think it's been about 4 or 5 years. Okay. Jersky, do you know if you use stock lending out of your TFSA, does it then count as TFSA limit contributions? Yes, it would. It would. So, and we're talking, like, we're not talking a lot. We're talking pennies, but yeah, those would count as contributions. You know, now, I do not know if Wealthsimple puts it there, though. I would hope, because normally Wealthsimple will drop stuff like that in your cash account. So I'm hoping that's they do something like that. I hope they don't just drop it right into the TFSA because it would kind of suck if it pushed you over your limit. Let's see. Clive says, I didn't activate stock lending in the TFSA, but Wealthsimple activated my RRSP in Lira. Okay. Let's see. Is Northwest Health profitable now? I think AQN is currently profitable. Yeah, AQN is starting to do a little better. They're actually making some good moves. When it came to some of the assets they sold off, really helped deal with their debt. So AQN, I think their drop is done. Northwest Health, I haven't looked at them in a bit. Let's take a quick gander at Northwest Health. All right. Here we are. All right. Yeah, let's see here. Let's just pull the last year. So yeah, you can sort of see. I'm going to go the last 3 years. There's that big slide. So it looks like their drop is probably finished. So does that mean they're going to recover fast? Are they going back up to 12? Probably not anytime soon. But I could see some recovery in their future, but you know, if you're happy about them, this would be the time to perhaps add a little bit. All right. John says, Anago Eagle, BCE, Cameco, CNQ, Enbridge, Royal Bank, Shopify, Suncor, TD Bank, and TELUS for HHIC. Okay. Nice. Yeah, those are, I mean, some of those companies are massive. Yeah, I mean, in Shopify, you guys know what happened to Shopify this week. They exploded and leapfrogged over Royal Bank. But actually, let's not talk about them. I got a story about them. Figma is an IPO, I think. Okay, fair enough. But that's the thing. I couldn't see that there. That's why, you know, if you're interested in a company and you see some stuff, crazy stuff like on Yahoo, dig deeper. If they're an IPO, then yeah, maybe that is something that you can forgive. Do you think NVIDIA would report good guidance? All right, so yeah, so NVIDIA earnings coming up soon. think is it this week? It might be this Wednesday. It's either this Wednesday or next Wednesday. I'm thinking it's this Wednesday, though. Well, let's find out. Let's head over here, and we'll go to our earnings report. Here we go, Canadian earnings report next week. All right. Oh no, Canadian. I want U.S. All right, here we go. Next week. So no, it's not coming. It's probably the week after this. So I know it's in August. So yeah, I would say the week after. Oh well. I can't wait. All right. Andrew says, hey, Candace, have you heard any chatter from the big corporations if the S&P 500 is getting overvalued? I'm wondering what your thoughts are on if we're getting close to a top. I always think we're close to a top, but realistically, I think we might be able to hold it up a bit longer. How long though? That's the question. I'm kind of like putting it in as yellow light. Like I don't see it as a green light. I see it as a yellow light. Like, keep going, keep doing what you're doing, but remain cautious. Pay attention to what's happening because it is going to turn around. But when? At the beginning of the year, I would have expected by the fall, but now I don't know what it is. I think the market just defies, even though everything happening in the economy between Canadian economy, U.S. economy, all the tariff damage, everything just seems to be going really, really well. And, well, not with the economy, bad with the economy, but with the market, it just keeps on exceeding. So I'm almost thinking that we're probably going to see it towards the very end of the year. Like this is a year that we could potentially, when it comes to a Santa Claus rally, that Santa Claus rally might be a Santa Claus kick in the head. We'll have to see, but I'll reevaluate as we get closer. But I'm anticipating a bear market down the road. But I think right now, proceed with the bull market. All of the analysts are expecting it to go longer. Proceed with the bull market, but just be a little cautious. Be mindful at this point. Ofer says, am I the only one piling into gold and silver because the party is going to end soon? My opinion? All right. You know what, Ofer? That's a great comment, and I'll tell you why. I will tell you why that's a great comment. That's a great comment because, well, we got a gold story. We got a gold story. And so it turns out that all that glitters really is gold, at least for the Canadian investors this year. So gold, as you know, oh boy, it's been doing good. So the TSX has almost surprisingly been very strong in 2025 with returns of 11.1% and counting. So why is that interesting? Well, that figure does include dividends, by the way, in case somebody is curious about that. But basically, the TSX is beating a lot of the U.S. Key indexes. So the S&P 500 at that same time, up 6.9%. The NASDAQ, 7.3%. Why? Well, obviously from the picture, it's because of gold. So the gold sector strength. Gold producers have been dominating the performance charts this year. So 15, and this is crazy, 15 of the top 20 TSX stocks this year are gold companies. So here's a few of our top performers. You guys all know, I've been harping about London Gold. London Gold, 120% total return this year. Dundee Precious Metals, 65% plus this year. SSR Mining, another 65% or higher so far this year. Kinross Gold, 65% or higher. In fact, there's only one non-gold name in the top 5 on the TSX, and that is Celestica, and they're Well, it's the AI boom that's powering them into the top five. So we have seen a gold price surge. So gold bullion is up 29% in 2025. So currently it's selling for $3,400 USD per ounce. That's pretty high. It's believe it or not, it's not the record. The record was actually set back in April. That was right after the Trump tariff threats. So back on Liberation Day, gold pushed all the way up to 3,508. So what the heck is causing gold to go crazy? Well, there's a bunch of factors. I know that everybody's like, it's a trade war, it's Trump. Yep, well, they're definitely a big part. So the Trump war is adding a lot of uncertainty to the global market instability at the same time. There's also concerns over the U.S. deficit spending, especially after Trump's massive one big beautiful bill. But here's this other factor too. A lot of central banks are buying at 30-year highs, especially emerging markets. They're stacking up on the gold. So that's pretty interesting. And, a lot of it is a desire to reduce exposure to fiat currency. Gold is seen as pretty much an apolitical asset. Now, another couple of factors with our Canadian companies. This is really interesting. In the past, when we've had a gold boom, companies go crazy with their spending. They're like, woohoo, we got a windfall. Let's spend all the money, boys. Spend all the money. Well, not now. Not now. So unlike these past booms, a lot of our gold producers, they're actually keeping their production costs and their debt nice and low. They're also avoiding those costly acquisition sprees, and they're returning some of the profits via dividends and buybacks. Now, London Gold had some special dividends last time around, so it's pretty cool. So right now, as an investor, it's just important to keep our minds on the fact that the gold sector is lifting the entire TSX. It is offsetting that trade war damage, and the combination of those high bullion prices and the disciplined operations, as we just mentioned, well, it's made this rally a lot more sustainable than past rallies. So gold is looking pretty darn good. It's looking pretty darn good. All right. See, that was perfect. That was perfect, Ofer. That was perfect. Your comment was absolutely timely. Absolutely timely. All right. Now I need to find your comment. There it is. King a Day says, actually, stock lending doesn't count towards your contribution limit. Really? That's interesting. I thought it did. Oh, okay. But nonetheless, it's still not a lot of money. So that is very interesting. That's very interesting. I did not know that. All right. King a Day, I have had stock lending with Wealthsimple since inception, and it never counts towards contribution, but you get a penny on a dollar, though. Yeah. That's the whole thing. You get next to nothing. Let's see. TELUS went down due to a drop in revenue, but BCE went up. Yeah, that's fun. It's fun. Ferris is in the house with a hello. Clive says, Wealthsimple had no problem lending out my ULTY and MSTY, not my HHIS. Oh, interesting. Yeah, I don't know. I don't actually, yeah. Let's see. Hi, Candace. Have you looked into PHX Energy Services on the TS? Yeah, not that long ago. In fact, what was it? Maybe about a couple of months ago, we gave them the deep dive treatment. So yeah, I mean, and I do like PHX Energy. I like them a lot. So yeah, there is a deep dive. Actually, BP, let me see here. I'm going to grab you the link. I will grab you the link because it's not that far back. It's not that far back. Here we are. Right over here. Let me grab this. Get shareable link. I'm going to drop it. I'll drop it in the comments for you. But yeah, here you go. You can get all my opinion on PHX Energy. Because quite literally, I did this on, let me take a look here, June. Towards the end of June, I did this deep dive. So yeah, it wasn't that long ago at all. Not even 2 months. David says we're heading into a weak couple of months, but then Santa could show up as a last push. We'll have to see. We'll have to see. Andrew says thanks, Candace. Also, everyone hit the like button. Yeah, guys, hit that like button. I'm gonna have some I'll have some iced coffee here. What is a dividend for Lug, and is it monthly or quarterly? It is quarterly. Well, here, let me show you. Let's actually. I can't remember exactly what it is, but that's why we got brains in a website. Here we go. LUG. Whoops, I put in jug. All right, that's not going to help us any. All right, let's pull this up. So I'll show you here right now. So right now their dividend yield is 2.191%. Quarterly, 61.9 cents a share. Now, let me show you what happened last time here. Let's go into the key data. And here's their dividends. So, oh my God, they have another one for September. We're getting double. We're getting double in here. So that's kind of interesting. But yeah, back here in June, they had this extra one that came out June 9th. So this here was 57, and then the other two together, the 41 and the 20.9, those added up. Those added up to the 60 whatever. So it looks like they're doing about 79 cents next time around. So at least in September, at least that's what they've reported so far. We'll have to see if they do a special. They did a special back here in June. You can sort of see that extra one in here, so it turned out to be an extra 57 cents, so that's not too shabby. All right, let's see. Xenial says nice. Let's see, what 3 stocks to buy now? I think healthcare is a little cheap. Anything else? Yeah, healthcare is cheap, that's for sure. I think healthcare, as I mentioned earlier, if it's anything that is related to basically boomers. So, for example, things like some of the long care homes I think are ripe. Like EXE right now. Let me show you this. So I love Extendicare, EXE. They're down a little bit right now. Well, you wouldn't know it from the last day. The last day they had a pretty good one. But let's pull up that 1 year, and you can sort of see they've been doing really, really well, but they did a little bit of a correction, but it looks like they're starting to climb again. I love this company, Extendicare. I think they're going to be fine. Another one, as I mentioned before, SIA, so SIA. So Sienna, Senior Living. Pull up the year, and you'll see as well, it's kind of doing that same thing. So I'm bullish on anything that really is going to touch boomers, because they're pretty much all retired now, most of them. I mean, there's probably some still working, but as they start moving deeper and deeper into retirement, that's when they're going to start needing more and more help. Things like long care homes and all of that fun stuff. That's going to be huge business. And I don't want to get morbid, but I will get morbid. If you look into companies that perhaps run funeral homes and things like that, well, at the very top end of the boomers, well, you know what's going to happen. They can't stay up there forever. Unfortunately, some of them have to make that the next movement in their journey. And that's going to put a lot of money into things like, and not just funeral homes, maybe companies that make, well, I don't know about headstones anymore. I mean, maybe some people, but a lot of people are getting cremated. So if I knew which company made, had a monopoly on, let's say, cremation urns and things like that, maybe there. I mean, anyway, let's get away from the morbid for a moment, but I'm just saying that's those type of things I would be looking at for sure. Rory points out that dividend. Yeah. KD, I like the Shopify single stock high income share versus HHIC. Shopify. Shopify is awesome. So, and we do have a Shopify story coming up. Rory missed that jewel when it was $40 a share. All right, gold is up because currency is worthless, and that will continue. You're not the only one who thinks that. Let's see. This will be seen as the end of BTC as a hedge community. Let's see. Earnings report for SIA on Tuesday. Ooh, that's interesting. That is interesting. I might put a swing on that. Interest. I'm just I'm doing a quick little copy paste of this. There we go. Because I might want to do that. I need to do a bit more research before I decide if I'm doing it, but why not? All right, very cool. Okay, I'm caught up. That means we can actually move to another news story. I love it. All right, so we got an oil story. We're moving from gold to oil. So OPEC. Oh boy, OPEC is upping production. So oil producers, they're turning the taps back on, and they're doing it fast. So OPEC is looking to raise oil output by 547,000 barrels per day in September. So this here is, of course, part of a full reversal of their biggest output cuts. So plus it's a boost for the United Arab Emirates. Combined change equals about 2.5 million barrels per day. So 2.4% of global demand. Now, as this is all happening, a little bit of the geopolitical backdrop on this. So the U.S. has been pressuring India to halt Russian oil purchases and to push Moscow towards a Ukraine peace deal. And I know there's stuff in the news right now going on with Trump getting back involved with Putin to see if they can get something going on with Ukraine. Now, President Trump wants progress by Friday, and this is all, like I said, this right now is all kind of unraveling a bit right now. Now, Russia, you guys may not know this, but Russia is actually a key OPEC member. A lot of people don't know that. Brent crude. So Brent crude, by the way, basically, we always talk about West Texas Intermediate. Well, that there is the benchmark for North America. Brent crude is basically the same thing, but it is the benchmark for Europe and Asia. So it's actually up quite a bit. So Brent crude is up around $70 a barrel, up from $58 a barrel in April. And because of that, the higher prices, according to OPEC, the higher prices are supported by seasonal demand and some tight inventories. And they're calling the global economy very healthy. And we did have a story not that long ago that was, they were kind of looking at it and saying maybe oil's a lot healthier than we think. That's what OPEC is kind of betting on. And they're also saying that right now that oil stockpiles are pretty low. And a lot of people are looking to add to those stockpiles. I know China has been adding like crazy. Now, so the next OPEC meeting, it's not happening until September 7th. And it's possible at that meeting that they could be looking at reinstating 1.65 million barrels a day in cuts that are still in place until the end of 2026. And currently, like OPEC is a big deal. They make about roughly half of the world's oil. Now, let's just see here. So far, like I said, the extra oil supply. So all of this extra oil that OPEC's dumping on the market, it's being absorbed pretty easily by, as I said, China. China is stockpiling, and the analysts are kind of concerned a little bit that there could be a bigger challenge when or if some of these other cuts get unwinded. So if OPEC decides to really start flooding the market, then we could see some interesting stuff going on with the price of oil. But so far, we have the market has absorbed the OPEC really, really well. So we're doing pretty good. All right, guys. Can't believe it. I can get 2 stories done in a row. All right. And this is another one that we kind of alluded to. So could a remote Arctic port, once known for polar bears, become Canada's next strategic trade lifeline? Oh boy. So back during the election, Carney kept on going on about Churchill. Well, it looks like it's becoming a reality. So what's happening up there in our polar bear territory? So currently, The government is actively considering transforming Churchill, Manitoba into a full-scale export hub. The plan: ship commodities like natural gas, potash, canola, and eventually critical critical minerals towards northward to Europe via an Arctic corridor. So this right now, it is backed. I was actually surprised, but it is backed and supported by Western premiers, and the Indigenous-led Arctic Gateway Group is also on board. Now they own the port and associated rail, so it's gaining. This whole idea is starting to gain a little bit of momentum. So why does it matter? The initiative, it aligns with Carney's overall pivot away from reliance on the U.S., addressing the fact that, roughly 75% of Canadian exports right now go to America. So we're moving away from that. This is one way to get stuff over to Europe. Now, of course, we're talking about a direct Arctic route. So right away, there's a few problems. Like ice. It's not like the Hudson Bay doesn't freeze that winter. It's one of these things to keep in mind. But if we do open this Arctic route to Europe, they are currently our second largest partner, and already they have seen we've increased our trade with Europe about 65% since 2017. So this is kind of interesting. Now, this strategic infrastructure investment, it's the kind of thing that they want to do, that whole One Canada bill. So it does fit what Ottawa wants. So it's probably going to move ahead. Now, the government has begun. They've kind of already begun greasing the wheels here. So in March, they unveiled a $175 million investment over 5 years to start modernizing this port. There's also $125 million that's been earmarked for operations and maintenance of the Hudson Bay Railroad via Transport Canada. And $50 million is also allocated for pre-development work at the Port of Churchill through the Prairies Economic Development Canada. But as I said, ice. Ice is a problem. So Churchill, they remain icebound for much of the year, while new icebreakers could extend the shipping window beyond 4 summer months. So right now, they've got 4 months. The Arctic route's viability as a year-round corridor, it does remain uncertain. And that's one of the reasons, guys, I thought they should just put pipelines to Kingston. Do Kingston. But no, they're gonna do this. I mean, it's gonna happen. I mean, we'll have to see. Now, if it keeps getting warmer, it feels like that today here in Ottawa, but maybe global warming will knock that up to 5 months. Who knows? There are, of course, private sector concerns as well. Insurance and shipping companies are cautious because of ice. The risks of ice, logistical complexity, and remote operations could limit a little bit of the buy-in. As investors, oh boy, this could be an interesting chance to back a Canadian infrastructure play that could open new markets deep into Europe and beyond. So, there could be opportunities here, but once again, some of that heavy upfront investment meets there's high environmental and logistical hurdles. So I'm kind of skeptical a little bit on this one. I hope that's coming through. I'm a little skeptical, but what can I say? The limited shipping season may restrict throughput, making ROI times longer. So it's going to take a lot longer to get your money back, per se. It's going to be interesting. Beyond some of the pure financial returns, the project does serve some broader goals in sovereignty, Indigenous reconciliation, and regional economic development. So it could work a little bit, but I still don't think it's the best choice. I don't think it's the best choice. I don't know about you guys. I'm not sold on it. Let's see. Petrocan has gas at 138 at the moment. Okay, is that good? I don't know how much gas normally is. I would like your opinion on ENCC. All right, so good old ENCC, um, covered call energy ETF, mostly oil. Um, I like it. I do like it. Right now, I don't see oil having a strong movement, and if all of this OPEC stuff comes to pass, so if we get further uh, production boosts, that will certainly have an impact on the price of oil down the road. So far it's been absorbed, and a lot of that is thanks to China. But as I'm I'm still a little cautious. I think ENCC, if you're in it for the money, for the income, I think you're fine. You're going to have your income there. It will come back at some point. Now, I believe ENCC did recently cut their distribution a little bit. I don't see them doing it again, but I would still stay wary on that. And there's also the ENCL, so the leveraged version as well. Now, if oil does start to finally pump after we get on the other side of all of this OPEC stuff, ENCL might not be a bad one to ride up if you want that income and you want to take advantage of the leverage on the way up. Silver Bear says, Ofer, my first purchase of gold way back in 1970 when it was $35 per ounce, kept on buying and accumulated enough to buy my first house. Paul says, just got here. Good afternoon. Hey, always good to see you, Paul. Rory says, I would love to see CN rebuild the mainland from Grand Prairie to Dawson Creek and then to Prince Rupert. All right, and this is back to gold. Let's see. I have kept buying and bought futures back in 2023 at 1800, sold and bought since then, still holding. Trader friends moved into Bitcoin, not for me. Yeah, and that's fine. And here's the thing. I mean, gold's doing well. I mean, that's the thing. You know, you can make. Here's the thing: if you become a Bitcoin millionaire, or if you become a gold millionaire, well, you're both millionaires, right? So there's more than one way to get wealth. That's for sure. Michael says Pfizer beating earnings Tuesday with profits of 0.78. That was a 0.20 beat, and that the first 2 quarters of this year that both beat for a total of both 46 has upgrades to the upside. Yeah. No, I mean, I do like Pfizer. I keep saying this to you, Michael. I like Pfizer. I do like them. I think Pfizer, a lot of people sort of they kind of both Pfizer and I was going to say Magella. I don't know why I was going to say Magella, but Modano. Oh, my God. Moderna. Both of them have been really associated with the pandemic, and I think that's not fair. I mean, Pfizer has developed so many good drugs over the years, and I actually did a deep dive on Pfizer a long time ago, but I do like them. I overall like them, and I think right now, while they're down, and even if it sounds to me though, that, they won't be down forever. But I think they're a good long-term investment for sure. Let's see. Morgan Stanley analyst Taryn Flynn maintains Pfizer with an equal weight and raises the price target from 32 to 33. Yeah, I can see that. All right. Paul says Solana 13.3% on the week. I switched from Sol.u to SSK last. SSK pays the staking rewards as a dividend, 5.5%. Purpose Investments was not transparent about staking rewards. Sol/share not up ever. Okay, fair enough. A Sanchez says, will CAD fall against USD due to tariff wars as we are more dependent on the US rather than the other way? That's been the prediction from the beginning, that the Canadian dollar would fall. But so far we've been defying. The Canadian economy, for the most part, has defied what everybody thought would happen. And so I would be careful making that assumption now. I would not have said that even 3 months ago. I would have been like, yeah, it will. But I would just be cautious. I would be cautious. All right. And Kev just got here. Awesome sauce. All right. Now, we're slowly getting through. All right, Shopify. We need to talk about Shopify. So Canada has a new corporate heavyweight, and it's not a bank or an oil giant. It's Shopify. So Shopify shares soared on Wednesday. Oh boy, oh banana bread, holy banana bread, 20%. It's not often you see somebody I was going to say soar by 20% in a single day. It's huge. It is huge. Now, it was oh boy. So yeah, they posted second quarter profit of $906 million. Now that 1 year ago, that profit was 171 million. So they blew that completely out of the water. Their earnings as well came in at 69 cents US per diluted share. Compared to, well, last year they were actually in the hole. They were 13 cents in the hole a year earlier. So once again, they blew things away. Obviously, if you jump 20%, you blew things away. Now, this, of course, this pushed their market cap up to 276 billion, which leapfrogged them over the Royal Bank of Canada as, well, they're now the most valuable publicly traded company in Canada. Their revenue also, of course, went up. Everything went up, right? But their revenue jumped by 31% year over year. And this was driven by a lot of different things. So international expansion, business-to-business sales, some of their new AI-powered tools. Now, their international GMV, guys, that's gross merchandise value, it rose 42%. And their business-to-business GMV, that surged 101%, and their offline sales grew by 29%. So they absolutely crushed it. Now, Shopify's AI push includes they've now employed this thing called an AI store picker, a universal cart for multi-store checkouts, and a catalog product discovery tool, all aimed at improving merchant sales and shopper experience. So yeah, and they've partnered with actually with OpenAI as well. So they're doing the right stuff at the right time, and that's always a good thing. That's always a good thing. Now, management. So Shopify management said potential tariff impacts were baked into their forecast. So they were ready. They were ready for tariffs. But the damage from the tariffs didn't materialize. And only about 4% of global GMV falls under the U.S. de minimis import rules. So meaning recent changes have had pretty much minimal effect so far. It's business as usual. So, I mean, as investors, Shopify's growth story, it's now kind of back in full force, combining explosive earnings with tech innovations and global market share gains. The question, I guess, now is, I mean, can they hold on to the crown as Canada's most valuable company in the face of, well, competitive and regulatory headwinds? We'll have to see. I'm kind of impressed. I'm happy. I mean, I remember when Shopify was kind of up around the top back in the early pandemic, and they fell hard, but they're back. They're back again. This is pretty exciting. I like it. Let's see. What about a Mexico deal? Are we snubbed? We are working on our relations with Mexico for sure. I think part of it, and I can understand, Mexico has some hard feelings about a few things. Like in the early days of negotiations with the U.S., Canada even went as far as to say, well, okay, what if we just forget about Mexico? Mexico hasn't forgotten about that. So there's work. We do need to repair a little bit of our relationship with Mexico. No ands, ifs, or buts about it. Going back to the start, thanks in advance. All right, Kev. Michael says, which company blew away? Shopify. King a Day. Oh, look at this. Proud owner of Shop, up 421.99%. Nice. That's not too shabby, King a Day. How do you think banks will do in the next while? So right now, there's a couple of things going on. So banks, of course, they have actually, let me put it, I'm going to phrase it this way. So we obviously have the mortgage wave. So all of the worst parts of the mortgage, of the pandemic mortgage renewals, those are all hitting now. They're hitting now. So those are the sub 2 and sub 3% that are, and with the Bank of Canada kind of not lowering the rates any lower at the moment, it's not the best, but they have built in loan loss provisions, and they have been very good. In fact, they have put aside more money than they needed for each wave so far, and that's good. Now, they've also been putting aside money for the tariff impacts, but the tariff impacts are just they're not hitting as hard as everyone's been anticipating. So for that reason, I think the banks have a little more leeway than they normally do, and I think that's going to be good for them. Are they going to explode in value? Probably not. Are they going to probably move forward with a slight incline to the upside? Probably yes. But I think banks will be fine. Paul says Palantir blew earnings away. First time, $1 billion, went up 21% in a week. Yes, Palantir is absolutely they've exploded this year. They've had a really big year. In fact, you may see Palantir sooner than later on one of my lists. I'll just say that. I don't want to spoil Tuesday's video. Morelli says, thanks. You're welcome. Cowboy, if they're bringing in CBDC, our banks are finished. You will not have a bank account. Yeah, I don't think you're going to see CBDC as quickly as a lot of people think. I think they're going to talk about it for years before any kind of movement is even made. So I'm not super concerned about CBDC yet. I do have it on a back burner radar, but for now I'm not worried about it. Do you think Lightspeed will take off, or are they a bottom feeder from now on? I'm not a huge fan of Lightspeed. It's hard to say. I can't seem to get excited about them. So I don't know if they're going to be a bottom feeder from now on, but there's nothing about them that excites me at this point. All right. Good old Shopify. All right, our next story. We got a cow. It's a cow story. Well, kind of. It's not really a cow story, but so Canada's decades-old supply management system is facing some fresh fire from south of the border. And this time, it's all about dairy proteins. Not milk specifically or cheese specifically. It's all about the proteins. So the U.S. International Trade Commission has launched an investigation into allegations that Canada is dumping low-priced dairy proteins into the global markets. Oh boy. So hearings began last week with U.S., Australian, and New Zealand dairy groups claiming Canada's system, which sets domestic prices and limits imports, lets processors export these proteins below market value. They're arguing that it makes no sense for a country with some of the highest domestic milk prices in the world to be selling proteins overseas at among the lowest international prices. The U.S. Dairy Export Council says that Canada is using global markets as a disposal valve for excess supply. Whoa! Well, that's interesting allegations. But I guess it's Canada, but what is Ottawa? What is Ottawa saying about this? Basically, Canada is a minor player in global dairy protein trade. Less than 1% of exports and production is tied to domestic demand for butterfat products like cheese. But U.S. officials claim processors have skirted past export caps by mixing proteins into other products to avoid classification. This case, all these allegations is coming up at a pretty sensitive time. So the ITC they're due to wrap up by March of 2026, just months before the USMCA trade pact comes up for review. So that's next July that comes up for review. And that, once again, it's raising more stakes that the U.S. can use in their argument against Canada and our dairy farmers, processors, and our trade negotiators. So it's pretty much another Another straw to throw on the camel's back. Oh boy. So right now the dispute is much about trade leverage as it is about dairy. It's basically more about trade leverage. We can see this clearly. So with margins in the global dairy protein market razor thin, even a small shift in supply could ripple through prices worldwide. So there are impacts here, but once again, I think it's a situation where the U.S. mostly is making a mountain out of a molehill when it comes to Canadian protein. I don't see us as, that's really being much of an issue. All right, we got one story left. One story left. Let's get it out of the way. It's an Air Canada story. No, not about swing trading, but, about the strike. So there may be some turbulence ahead for Air Canada and perhaps even a buying opportunity. So we're going to work that in a little bit. So Air Canada and their union representing 10,000 flight attendants have resumed contract negotiations on Friday, which is good. They're trying to avoid a strike that could legally start as early as August 16th. So the union says that its members voted 99.7% in favor of a strike mandate, giving them the ability to walk off the job with 72 hours notice. So they have to give that notice. I don't think it's been given yet. While a strike isn't guaranteed, the leverage is now firmly in the union's hands. So this is kind of that thing. As investors, the risks are kind of clear. Prolonged work stoppage could lead to flight cancellations, lost revenue, and of course a hit to Air Canada's brand reputation. Labor disruptions also tend to create short-term share price volatility. That's the key here, especially if we're looking to do some swing trading with Air Canada. So particularly if we hit that deadline and they're still negotiating, that could really be a good thing. That could actually knock that price down a little bit, maybe give us some entry points into a swing trade. So currently the key sticking points for the union are higher wages and the elimination of unpaid labor changes that, if agreed to, could raise Air Canada's operating costs at a time when margins are already under pressure from fuel prices and competitive fares. So yeah, Air Canada definitely doesn't want to have it. These talks have been ongoing since January, and they even went through a conciliation without a deal. Both sides say they want to avoid a strike, but the clock is ticking and the market will be watching closely for signals before August 16th. As I mentioned, if Air Canada goes below 18, so that's my new entry point. I'll be starting a new swing trade at 18. So let's let this. I'm hoping it kind of drags a little bit just to push that share down a little bit so I can get in. I think that would be fantastic. So what can I say? Well, guys, that's the news. We're done. Haha, now it's just you guys. All right, Paul says that rotation model does better not selling Palantir on the back test. Okay, interesting. Yeah, because Paul has this pretty interesting cycle of buys. It's been doing well for him though. Xenio. Is HHLE any good at this point? They're going to provide you with income. So those are the health, the health leaders. You will definitely get income from it. If income is your goal, then yeah, they're fine. Are they the best? No, but they're fine. But yeah, when it comes to, if you're looking to get a little bit of value on those as well, you might have a little bit of a wait for that. But right now, that volatility and being down is actually not a bad thing. Like, they're still collecting premiums, and they're doing well. So that's what I would say. All right, Andrew, are you familiar with EQB? How do you think they'll do? Lots of talks that they're not meeting guidance. So EQ Bank, I like EQ Bank. They're my bank. That's the bank I use. But yeah, they've been sort of, I don't want to say struggling. I don't want to say struggling per se, but they've kind of lost a lot of that momentum that they had earlier. So I still think they're going to be fine, and I think long term they'll be fine. But I think right now, if you're looking for them to soar, they're probably not going to soar at this point. And if they did not meet guidance, we could see, I would say, a pretty good buying opportunity because I still have a lot of faith in EQ Bank. U.S. will start World War III over eggs. Maybe. I think the U.S. will start probably. People might start World War III just to say, "Come on, we just want to end this." Um, Paul, is this dairy dumping protein the milk above the quota? They export whey protein. Um, yeah, it's one of those things. I know. I think it's like they're putting some of the milk protein apparently in other products, so they can sneak it through something like that. I don't think we're talking so much about whey protein per se, but who knows? Instead of pouring milk down the drain, yeah, I like that. Thanks for the news, says John. All right. Paul says BTC $1. It's just a fad. BTC at $100. It's a pyramid scheme. BTC at $1,000. I kind of like this. It's a bubble. BTC at $100,000. It's getting too expensive. BTC at $120,000. I'm waiting for a pullback. BTC at 1 million. Welcome to Wendy's. Okay. I don't know if I completely get the welcome to Wendy's part, but I do get the rest of it. That's pretty funny. That is absolutely pretty funny. What can I say? Whew. Guys, we're up about the 2-hour mark, so if you got your last minute questions, let's get them in. Let's get them in. I mean, if you ask a lot of questions, we'll go longer, that's for sure. But yeah, let's. I'm gonna have some coffee while you guys do that. Oh, it's so good. Very, very, very good. So coming up once again on the channel this week. This week's gonna be fantastic. So Tuesday's video, we're gonna look at the newer income ETFs. So the ones that are like a year or less. So we're gonna look at the tops of those. We've got a great list. We are also on Thursday. Oh boy. Adriano is going to join me for This Week Conversation. So Adriano from Passive Income Investing. So bring your income questions. He's probably, I don't know how much he knows about non-income questions, but hey, bring those too. It should be a great conversation. I can't wait. It's going to be a lot of fun, and yeah, it's gonna be a good week. It's gonna be a good week. I can't wait. So what can I say? Cowboy says, story of a guy buying a pizza with a large amount of Bitcoin. Yes. I think that was the first transaction done with Bitcoin, is that a guy bought a pizza with a lot of Bitcoin. A lot of Bitcoin. Back then, Bitcoin was really, really cheap. Oh, okay. Oh, you ran out of room. Oh, yeah. Those stupid limits. Let's see. Welcome to Wendy's, sir. May I take your order? There we go. How many companies report earnings all 5 days last week, if you know? Don't know. I have no clue. I mean, there was a lot, but I'll, well, here, let me show you. All right. I'll pull up the earnings calendar here. So this here, well, this is the U.S. Let's just do Canada for now. And we go to this week. So these are the ones that reported their earnings this week. So there is 214. So 214 Canadian companies. And U.S., I'll do U.S. for you too. I'll try to do U.S. for you. There we go. Canada, U.S. It's going to be a higher number this week. Here we go. 1,463 companies. There we go. That's a lot. What time with Adriano? 3 p.m. Eastern. 3 p.m. Eastern. Yeah, I pretty much with the This Week conversations, I'm going to try to do them on Thursdays, but I have to accommodate when the guest is available. And I haven't even figured out yet what the frequencies is. I know I did one last month and I got one this month. No guarantee I'll have one in September, but you never know. We'll see if the opportunity arises. Rory says Little Caesars is good. Pizza. Yep. Actually, Rory, speaking of Little Caesars, last night it was too hot to cook, so Jill actually ordered pizza from Little Caesars. So gotta love that. Paul says looking forward to Adriano. Yes, it's gonna be fun. I'll be watching from work then. Yeah, or you can watch the replay too. But yeah, definitely. It's gonna be a good show. It's gonna be a good show. I'm looking forward to it. There's a lot. There's a lot. People have a lot of misconceptions when it comes to income investing, and we're gonna try to clean those up. And sometimes some of the misconceptions may not just be that it's bad or that it's good. I think there's misconceptions both ways. But anyway, we'll definitely do all of that. All right, let's take a look here. Oh my gosh, itchy. Cowboy says been stacking up on oil, gas. There is nothing better to heat your home, run your truck. I am not interested in pushing my truck. Yeah, I wouldn't blame you. Can we ask him questions? The simple answer, yes. I'm going to try to get to as many questions as you want. If you want to guarantee that we get to your question, then use a super chat. Super chats will get 100% answered, and I'll sort of pick and choose in the other questions that we have. And I'll try to get to as many as I can. But if you definitely 100% want to get your question answered, then definitely use a super chat. And it doesn't even have to be a big one. Like, I think 99 cents is the lowest one you can do. So, throw in a buck, get a super chat, and you'll get your question answered. Rory says, waiting to see if C&Q drops to 38. Interesting. Even Adriano says, do not touch yield max. The Canadian CC ETFs do a better job for possible price appreciation with only 33% to 50% as covered calls in real stock. Yeah. And we're going to talk about yield max. Like I'm hesitant. Like, I know some of you guys love yield max, but I am very hesitant. I'm very wary of yield max. So, yeah, and we'll definitely talk about that for sure. Dorpat, I really need help understanding ROC and NAV erosion. Oh, guaranteed, Dorpat, guaranteed those will be topics. Those will be topics. No ands, ifs, or buts about them. Because what I will do, and guys, here's the thing. If you absolutely have something you want me to work into on a question, because I'm going to come up, I'll have my list of questions. You can always message me, and I can, I'll see if I can throw your question into that. But otherwise, during the show, super chat, and we answer it. Or, hopefully I see your question, because I'm going to try to grab the ones that that catch my eye. That catch my eye. I won't see everything, unfortunately, but we'll do our best. That's all I can give you. Clive says, I have no problem with ULTY. MSTY was a great performer for me. Yeah, like I jumped into MSTY for a little bit. Just because I don't like it doesn't mean I won't take advantage of it. Bought more C&Q last week. Nice. I did as well. Andrew says, I think I'm going to roll over some stocks to companies that never seem to go down. Yeah, well, and there are companies like that. That's knowing how to use a good stock screener can definitely help you find those companies too, for sure. 87 billion cap for C&Q. So yeah, I'd like to add, for sure. Let's see. I also got IPO 9 monthly. All right, cool. Very, very cool. Let's see. I watched UTLY for months before jumping in, but I'm pleased with the returns. Okay. Yeah, and the ULTY, that one caught me a little off guard. Somebody was asking me about it the other day, and it was yield max. So normally yield max has been doing synthetic covered calls. So it looks like ULTY may not be a synthetic covered call. If they're actually holding stuff, then it can't be synthetic covered calls. So I was like, oh, yield max has branched out. So I really do have to go over and take a better look at ULTY. I've had at least one person request I do a deep dive on them. I don't know if that's gonna happen. Let's see. some of those USACC cover ETFs have so much NAV erosion that the stock did a reverse split. I can understand that. What does NAV stand for? Net asset value. So net asset value. Yeah. I do want to I want to create, I haven't had a chance yet, but I want to create a document that we can either put on the Discord or the Facebook or both, that just gives a breakdown of what all of these things are, the different fundamentals. And maybe somewhere down the road, I'll make a video, just it'll be one of them tutorial videos where I just break down every fundamental, what it is, how it's measured, all of that. Because then when somebody asks me about it, I can refer them to that video. So it would be very handy, actually. It'd be one of the ones that I would probably add, so that I could, because yeah, like right now, if you want, like for example, if you want to go to, if you want my my Blossom link, you just do this. You just type in !Blossom. You can do the same thing with Wealthsimple. Then the Nightbot comes in and gives it to you. So I want to get a couple things like that, because then I could have a couple videos on that as well. So for example, we could do maybe one fundamentals, and then it would take you to that fundamental video. So that's going to be interesting. Oh, one other thing. I am planning, before the end of the year, I plan to have a fully functional website up. So right now, when you go to mountainfinance.ca, it just basically reroutes you straight to YouTube. So I actually want to get a website up and running, and I think that would be kind of fun. And then see if we can incorporate, probably if we can sort of embed Discord into it. I don't know if you can do that or not, but we'll find out. We'll find out as we move a little farther along. So it'll be fun. It'll be fun. All right, guys. It seems like you guys have come to the end of your questions, so that's fine. We've been at this for a good 2 hours. We'll be back here, of course, on Wednesday live to do the market close, and Thursday with Adriano, and we got videos. Holy banana bread. It's going to be a great week. All right, guys. Until next week, enjoy the rest of your weekend, and I'll see you guys. Well, I'll see you guys live on Wednesday.